May profits be upon you. Welcome to another weekly Forex forecast. Thank you for watching. Thank you for tuning in each week. Now, listen, I need you to pay attention this week because I'm going to be putting out a bunch of videos this week. All right. I'm going to be trading. Uh, I'm going to be, dropping some videos, dropping some setups. I want you to be, to benefit from it. I want to get some back and forth from you. I want to, want to get your comments and questions. I want to answer them. All right. So, you know, work with me. I'm going to give out some good stuff this way. I'm going to be putting some energy out, and I'm hoping that you guys appreciate it. Anyway, do not forget to hit the like button and the subscribe button so you can get direct notifications of the my videos. All right. Now, let's take a look at the week ahead. Not a whole lot to speak of as far as red folders is concerned, especially with the U.S. All right, Monday, I'm gonna take it easy. Monday, give it a chance. All right, because there's going to be a bank holiday. There's no other red folders for anybody else. It's probably going to be a low range, low liquidity, low volatility kind of Monday. All right, Tuesday, you see that the Aussie dollar has an interest rate decision to make. Make sure that you trade after that news and not before it. Don't get caught on stop loss or something because you wasn't paying attention to potentially high impact news for the Aussie dollar. All right, the CAD has CPI data. The pound on Wednesday will have CPI data. That's going to be some good good infusion of volatility for those markets. Thursday, we finally get some U.S. dollar news that'll add some good juice into the markets, as well as the euro with the French and the Germans and the pound. They're going to also be active, and the pound and the CAD for Friday. Decent week, should be a very tradable week, and that's what we want to find, right? All right, because the markets have been consolidating. We've seen a lot of consolidation. We've seen a lot of sluggish movement, low ranges. So a tradable week will be welcome. Now let's look at the U.S. dollar index. I think this thing is going up. It's going to continue to go up. Why? 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 Because one, after uh, this low here was taken, all right, with price moving to the side, big broad strokes moved to the side. We finally pushed higher around January. Then Trump came in office and things have been dropping and tariffs and everything. The US dollar has lost value. And then we see the recovery happening here. All right. After this low was taken, you expect when price takes out these major lows, you expect some kind of retracement to happen. Okay. Correction to the prior move. Yes. All right. Now, inside of that, we hit these lows here. There is a monthly fair value gap there, but that's only good because it's old. It's going to act as a speed bump. A lot of times you expect price to hit those old PD arrays or whatnot and just react from it, but not reverse from it. All right. So we have a reaction here. Could we expect price to continue down? No, I expect price to continue higher. Why? Because of this low and this line here. What am I looking at? Go to the yearly chart, and what you can see is a yearly fair value gap here and here. Okay. And price has dipped its toe into that yearly bullish fair value gap just last month at the end of April. All right, we have we dipped our toe into that at the end of the market, the low of April, went inside, and we are continuing to react to this yearly fair value gap, which could be used for higher prices. All right, that's one reason why I'm thinking that prices will go high. If we go to the weekly, if we go to the weekly fair, the weekly chart, All right, we can see how the week closed last week. All right, we see this wick of respect as price went higher. But what I want you to notice is that we ran through a bearish fair value gap here. All right, and price just continued to close higher through it. Right, we haven't finished. We didn't close above it just yet, but you can see that one, two, three, this is four candles, bullish candles going up higher. I think that we're going to continue to go higher. All right. Look at this $100 range. All right. Look, that's $100 price point. Price slow down there, slow down there. All right. We got below it and now we're trading back above it. I think that is going to act as support as well for higher prices. If we go to the daily, we can see that not only did we tap into the old monthly bullish fair value gap, but you can see that we reacted to it, and then we see that this is a series of higher closes, higher highs, with higher lows following. And where are we at here? This is a daily fair value gap, a bearish fair value gap that price has reacted to and then uh, pushed to the high of. You understand? Pushed to the high of. All right. And we didn't get that bearish follow through behind it. Not yet. Nope. Mm-mm. So these lows here, I think, are going to act as, just as I have it written here, is sell side liquidity. I'm thinking that the markets will dip. Okay, what are you doing? All right, I think the markets will dip below these lows, sweep that liquidity into this area of demand from this swing. There's a sell off from the sell off here to the stronger buy up. All right, this is a sell before the stronger buy, all the way up. Price comes back to it. I'm expecting price to find support here for higher prices. Now, what does that mean as far as trading? Because I don't trade the US dollar index. That means all of the ones the currencies that are up against it will likely uh, move the other way. Now, not in every case. Now, let's look. The euro. The euro is bullish as far as the COP report is concerned, and we look at what investors are looking at, the institutional players, all right, institutional traders and hedge funds, they are bullish on the euro, all right, and they have good reason to be. Why? Because it just broke these highs, right? It broke those highs and approaching this high, the range high, right? Just the inverse of what the US dollar index is doing. All right. Uh, uh, they are still bullish, but you see, it's been bearish to the US dollar because the US dollar has been bullish. It's dragging down the euro. Could we find support here? Could we find support here? I'm not taking buys in this market. I am not taking buys in this market while the US dollar is uh, still having bullish closes. There could be some short term bullishness in this market. All right. I feel that the markets are in the euro. If we go down to the daily, I see the euro has pushed up higher here, pushed up higher here. And each one of these acts as an area of demand. All right. And that's where we are right now. If price starts closing below that low, that cherished low at 109.90 or so, or just call it 1100. Price starts closing below that low. That is a bearish market structure shift to the downside here. And that's when I'll be looking, is the market giving us bearish fair value gaps along the way, all right, to use to attack lower. That's what I'll be looking at. All right. But right now, the US dollar is strong. It is acting strong, but it's at an area where it could have a bearish reaction. That would give us short term weakness in the U.S. dollar, which would be short-term strength in the U.S. I mean, in the euro, because the euro is trading against the U.S. dollar. I hope I'm not confusing you with all of this. What you want to look for is nothing less than confirmation. If the market on the euro, if the euro breaks that high, all right, that would be a bullish market structure shift. I'll be waiting for price to pull back to it for a higher probability trade to the upside. But as I'm speaking right now, I think we're going to be taking out this low. If we take out that low, that is a bearish move. That is a bearish look, and I'll be looking for price to pull back. Are we creating an expansion candle? Are we creating areas of fair value? Will the market offer fair value in the form of bearish price action? I think so. I think that's what we'll be looking at. So that's what I'll be looking for. I'm going to stand ready for it. All right. I'm going to stand ready for it when it comes. All right. But I'm going to wait until I see some definitive price action. Like I said, we might see the markets sweep with the U.S. dollar index for it to continue higher to that high. All right, for it to continue higher to that high, and then maybe we'll see a move down. But I'm looking for short-term bearishness for a longer term, a more higher probability trade to the upside with the U.S. dollar index, and just the opposite with the euro. I'm looking for prices to continue down as it pulls back, and then to set up a higher probability trade to the upside. All right. So that's it. I hope you get it. All right. If there's any question about it, feel free to ask. I'll be looking to answer some questions. Okay, what do we got going on here? I don't even know what this is. What is this? Why is that there? Okay. All right. So we're on the pound. All right. The pound is a little stronger than the euro. All right. It's been hanging tough in this weekly fair value gap. Here, you can see it. All right. Here and here. So it could use this for higher prices. All right. Again, we're going to have some weakness in the US dollar just so it could go to that buy side liquidity. So this is a market I'm going to keep an eye on, a very careful eye on. All right. It didn't give that big push to the upside. Gave us this doji candle last week. All right. So if we look at the daily, this is where I'll be looking. All right. If we look at the daily, do we have something that we could use? Price has been moving kind of sideways, man. All right. Even though it closed below the range lows here, this range, it came right back inside the middle of that range. Could we see price go lower? I think we could. I think that there's a possibility, but I'm going to wait until there is a specific market structure shift to the downside. All right. I want to see a shift in the market. All right. We can see that these these lows here are going to act as a draw on liquidity. All right. We're already taking that low here. Could price continue down to take this low and then find a move to the upside? I would like to see that. I would love to take a higher probability trade that says, hey, we sweat sell side liquidity first, and then we're ready to move higher. That's when I would want to get involved in a buy in the pound. If we go to the Aussie dollar, kind of the same kind of setup. If we look at the weekly, all right, the Aussie dollar, the CAD, the Swiss, not so Swiss too, and these are markets that where the COP report shows that investors are more bearish than bullish. All right, and you can see that it's been bullish, right? And then we had these two weeks of bearishness, but it's kind of moving sideways. All right. Why isn't it moving higher? Why are we getting these big wicks to the upside? Why? Why? All right. This is there is a draw on liquidity here. This is a bullish fair value gap on the weekly. It has not been tapped yet. I believe that we will see that tap, and we may find bullish, support here for higher prices. I believe that we're going to have some short-term bearishness first, all right, before we see price push higher. If we go to the New Zealand dollar, we have the same situation. We have this bearishness with the U.S. dollar pulling it down. All right, and if the U.S. dollar starts to show weakness, this is when we'll see the markets shoot up for uh, this buy side liquidity at these highs. Okay, and I'm looking at price pulling back into. God dog it, there's something flying around in here. What the heck is that? Doggone it, distracting me. All right. So, and you can see that it's filled this bullish fair value gap here. So I'm looking forward to take that low into uh, this area where once we take that low and hit that volume imbalance that's there, I'm thinking that we may find support for higher prices. If we go to the CAD, which follows oil really closely, if you look at my oil forecast, I'm looking at short-term bullishness before a longer-term bearishness. So we may see a couple of days of bullishness as it reaches for this buy-side liquidity here before it starts to pull back down. This is an area where we have a buy up and a sell off here, and this is an area of what do you call it? Supply, and I'm looking at price move down from that area of supply. All right, if we go to the Swiss, we can see similar price action. We took a very important high here. All right, not a strong close above it. We see the US dollar pulling it back down into these sell to buy wicks, and I'm looking at price. Doggone it, man! What is that? If I can get this area here where we have that sell to buy wicks here, that is an area of demand, and we may see price find support there. All right. If we go to the daily, we can see that we are balancing at an order block. I like to see price take those lows out before moving higher. That's what I'd like to see. I'd like to see the sweep of liquidity before a move higher. If we go to the Japanese yen, which is the last market, you can see we've been pushing higher, breaking structure to the upside, only to start breaking down, making lower lows and lower highs. All right, this buy up before the strongest sell off, and then price returning to it looks very bearish to me, and I'm looking for price, the reaction of price here. I think there's the structure is saying that it wants to go down, but the markets, the COP report shows that uh, investors are still bullish in this market, still want to see the market push higher. If the U.S. dollar is strong, it's take money from safe havens like the Japanese yen. However, all right, if we see some short term bearishness in the US dollar, that's going to allow the Japanese yen to move higher. But I like a bearish move from this price range. All right. And yeah, this week I'm going to be looking to see if it comes down. All right. We'll see. All right. As long as it's above that high, uh, I'm not taking shorts. I'm not going to take shorts just yet.